Thanks for joining us. I'm Rebecca Powers, your host today for Retire Right Television. And joining me is Paul Roberts, founder and CEO of Roberts Wealth Management. We were just talking, Paul, and there are a lot of myths and misconceptions about the financial world. Some people Google like they do if they're sick, like, oh, what's wrong with me? Let's talk about what are some of those misconceptions.
Well, let's start off by saying, yeah, that's funny. I guess our audience doesn't know this is a conversation we were having behind the scenes before we started this segment, and I was sharing some of that with Rebecca. She said, "Oh my God, everybody should know that, right?"
Really?
There are a lot of myths and misconceptions in our industry. So many of them that it would take us a few shows to go through them all, right? But let's just touch the surface of a few of them.
Okay.
One of them I find is that a lot of people, they feel like they're with a big company, so they're being looked out for. Things are being watched over for them. So, we ask people a lot of the times, well, who's watching your money?
Yeah, good question.
Who's doing what? Who's watching over your money when you sleep at night? Who's watching over your money when you work or you're with the grandkids during the day? And people say, well, my company. My advisor is what I usually get, right?
Yeah.
And so the my advisor one is the biggest misconception out there. They go to work with a major brokerage house and they say, all right, you've got a diversified portfolio, we're charging you a management fee. So then they say, well, I'm charging a management fee, I must be being managed, right? Somebody's overlooking it. My advisor is managing my portfolio. First of all, that is one of the biggest misconceptions out there. No, they need to know, no one's watching over their money. Okay.
So what's happening?
That advisor's definitely not watching over their money, right?
Yeah.
Because you know, as I talk all the time, advisors are busy people, right? So take for instance, if someone asked me that, hey, are you watching over my money? No, I'm not watching over your money. I have over 1,400 clients. If they all have just 20 positions in the market, that's 28,000 positions for me to analyze. When on earth do I have time to go through 28,000 positions and analyze all of these portfolios? I don't, right? So that's where the separation comes in, where people don't understand the true value of working with an independent firm like ours is.
Right.
What we do is we don't try to pretend to people that I'm watching over your money. I'm sitting here all day watching all my clients' money. That's physically impossible and run a business at the same time. The beauty of what we do is we're independent, so we contract with individual asset managers. Those asset managers don't have a day job like I do.
That's all they do is focus on that.
That's all they do all day, every day.
Then you get all the information from the different areas, and then you make the decision based on your individual person's needs.
For our clients' needs, we decide, we've got a handful of, we've got a number of different asset managers we work with, what we refer to as institutional asset managers, right? So they manage assets on the institutional side, but we've got a variety of them. Our job is to sit down with the client, find their needs, their concerns, and figure out the combination, and it's never just one institutional asset manager, because there's no one of them that does it all or does it all right.
Yeah.
We have a multitude of them. They have different strategies, different philosophies, different tactical styles of management. Some of them are active, some are passive, some of them are rearranging all the time, but they all have a multitude of different specialties, as we say it, right? So it's a matter of looking and saying, oh, this one's really good at inflationary protection, and we're going to bring them in, and this one's really good at growth, and we're going to bring them in, and this one's really good at handling the markets and managing drawdown potential of a portfolio, and we're going to bring them in. But it's too hard to give an example, a generalized example on air right here to you, because I don't have an individualized client sitting here, right?
Well, let's say you have someone, you have their 100-year plan, and they turn 59 and a half next month. There you go. Because you've taught me that about the big tax change you can do.
Yes, as soon as they turn 59 and a half, they can go ahead and roll over that money in their old 401k from work and get out of their 401k, go into the private marketplace and create something a lot better for themselves, which everyone should do, because first of all, 401k has just too high fees. They're a great tool because they force people to save, and maybe they still get a company match, but the fees are too high and they have a limited menu of options inside of that 401k, so they should roll that over when it's time for them to leave. But then when they go to roll that over, they have to choose who's the financial office I want to work with. one of the first questions I would say they should ask them is, who's watching over my money, like I just stated, right? And once they roll that money over, of course, we're going to start in our firm, but we practice a lot differently from most financial firms. We're always going to start with your income needs, right? It doesn't matter. You can have the greatest growth in the world. You can have a lot of things, but if you don't have income and that income's not stable and planned out and you know it can't sustain the rest of your life, then you don't really have a retirement plan, right?
Right.
The only thing all of us share that we all need the rest of our life is income, right?
Well, from doing the show with you, I learned that what you told me about the IRS, they allow you when you're 59 and a half to roll it out tax-free. I told my sister that. She's like, why didn't my financial planner say that? I'm like, I don't even know if he knows when your birthday is. You know what I mean? I mean, this is real things that affect real people, and I love that about your team because they have all these specialties. They know each person very intimately, too, because you have continued education and all these different things.
We build very, very deep relationships with our client base.
Yes.
You know, we're not just in the business. Problem is, in our industry, a lot of people are what we refer to as product pushers, or they're just in it for a sale. We're not in it for a sale. We're into building long-term relationships. That's why we go so far above and beyond in our planning process for our clients, because we don't simply want to make a sale of some products to you. We want you to be our client for the rest of your life. We're very, very big on client retention. I know you spoke of that in some shows.
Yes, 99%, and that's amazing.
Well, and to the viewing audience, a lot of people, that doesn't sound significant, but in our industry,
that's
the
big.
Client retention rate on average is about 74%. So every year they have to go out and replace 26% of the clients they lost in the previous year before they see any growth.
And so some of their efforts are on that.
A quarter of their energy every year is
going
going back. So they're taking 2 steps back to take 1 forward every year, you know. They asked me, why is your company growing so well? I said, because I don't lose 26% of my clients every year. I don't have to replace them. We take care of them. We build long-lasting relationships. We educate them. We empower them. They're part of the planning process, which is very key. That's part of our client retention rate, too, is that our clients understand what they do and what they have because they were educated and participated in the planning process and were engaged with the advisors through the process, so they understand why they're doing what they're doing. You see, most people out there, if you start asking them questions about their retirement plan or their financial plan, I don't know. Well, why do you have that? I don't know. Well, what do you have going on? I don't know.
I don't know. I'm just trusting someone because it's not anything I really understand is probably how they feel.
How are you doing? I'm doing okay.
I think.
What's okay? Okay means I think, I hope, I don't know, right?
Right.
We don't have that problem. Our clients are very empowered and educated. They know exactly what they have and why. Therefore, when somebody comes along trying to whisper little secrets in their ear or try to mislead them or misdirect them, oh, well, you want to leave those Roberts guys because we got the greatest thing since sliced bread, they can't be deterred because they know what they have and why they have it and how it's working.
And you would be happy if any one of your clients went in to get a second opinion because you're that confident.
We encourage them.
Tell our folks at home what they can expect. They're gonna, if they call this number 388-2031, what can they expect, Paul?
First of all, like Rebecca just mentioned, if you haven't had a second opinion of your financial plans, now, in the uncertain world we live in today, it's more vital and more important than ever that you go ahead and get that second opinion. So I'd ask you, do you have enough confidence in whoever gives you your financial advice to get a second opinion? If so, great. Come on in, sit down with one of our all-star advisors. Let's look at your situation. What we're going to do is we're going to have a warm cup of coffee, a conversation. That's all it is a conversation. We're going to ask a lot of questions. We're going to have you help paint us a picture of your goals, your concerns, your fears, where you're trying to go, what your plan looks like. And what we're going to do is we're going to notice any red flags in that plan or anything that conflicts with your goals or your concerns. We'll bring them up. If we feel that we're a good fit to work together, then we'll start to suggest solutions to those answers. But here's what you need to understand. We have helped thousands of families along the Gulf Coast create strategic solutions so that they can sleep at night and they don't have to worry about anything to come. Yes, there is a lot to come in this uncertain world, but there's nothing we can't position for and be prepared for before it ever arrives. So pick up the phone, call us, come sit down with one of our all-star advisors. Let's put you in the driver's seat for this retirement.
And it's complimentary and it's no obligation, so definitely give Roberts Wealth Management a call, 228-388-2031. Stay with us. We'll be right back.
Do you know how much you're paying in fees or commissions with your current plan or advisor? What about unnecessary risk or future tax implications? Sit down with a fiduciary advisor who can help you understand important retirement concepts and so you can make the best decisions for yourself moving forward. We may even be able to answer questions you didn't even know needed to be asked.
Hey folks, what's your next move? Let's get you set to retire right. At Roberts Wealth Management, we are passionate about making sure our clients live stress-free in retirement. Our biggest fear when meeting with new clients is whether it is too late to fix other advisors' mistakes. When you're nearing retirement, it's essential that you have a written plan and know exactly how that plan will work. Many consumers are loyal to their current advisors instead of the success of their plan. Always get a second opinion. For a complimentary review, contact us today.
Welcome back. I'm Rebecca Powers here with Paul Roberts. He is founder, CEO of Roberts Wealth Management. You have changed lives. You have inspired so many, including myself. What does the market look like? I'm almost scared to ask. We've got record gas prices, record unemployment now, all kinds of negative news. And you just smile and you sleep so well at night. I mean, what do you think the market's going to do this coming year?
Oh, well, yes.
Sorry,
so let's talk about Market Outlook 2022, right? What are we expecting? First of all, what's going to happen or predictions is not a game that we get into, right? We're risk managers and asset managers. As a risk manager, you never, ever get into future telling, right? But we deal in probabilities. And we look at what are the probabilities of this occurring, or if they make this move, what are the probabilities of this occurring? I got to tell you, right now, this year, it's going to be very, very interesting to see how the year works out. There are quite a few different things at play here. And, you know, I've been hearing a lot of different people say, well, my broker says, you know, the market's been bullish for the last 3 years and we're going to have a bull year. All right. Anybody who is making predictions to the full outcome of 2022 right now, I would turn a deaf ear to.
Yeah.
Because if you ask me what's going to happen, I'll tell you, I don't know. I know a couple of different scenarios that can occur and the probabilities that those scenarios may occur. But I would start it all off by saying the rest of the year will be determined completely and solely by the actions of the Federal Reserve.
Okay.
Problem is the Federal Reserve has backed themselves in a corner. Now, you know, March 15th, right around the corner, we'll have the Federal Reserve meeting. They'll come out, and that's when they'll publicly speak. Hopefully, they don't speak as vague as they did to us back in January of 2022.
I think that's on purpose. But
yes, anytime they speak vague, that's when you should pay attention, right?
Don't they know that March 15th is the Ides of March, and that's maybe not a good day, but
yeah, they're not real great at picking dates, right? I guess so. But the whole point is...
So they'll give a projection.
Yeah, they'll give their projection, but I'm so curious, and I can't wait to watch and see how this all plays out this year, because the Federal Reserve has backed themselves in a corner. With all of their stimulus, or for our viewing audience, all their printing money, as they say, right? Their money printing, and they're artificially keeping interest rates low, and their repurchasing program of assets. You know, a lot of people don't know. They say they're printing money. They don't really have to print money anymore, right? And hit some buttons and inject some money into the money supply. But what do they do with that money that they create? Well, they're repurchasing. You know, they're purchasing corporate bonds. They're purchasing treasuries. They're adding assets to their balance sheet at a rate that they just cannot sustain. And everybody knows that. Here's the problem. They have backed themselves into a corner to where, honestly, this year they're a little bit darned if they do and darned if they don't. They don't. And so they're kind of in a pickle. They're going, we can't keep rates as low as we've had them all these years, because now we're over 10 years of rates under 3%. And pension funds across America need a 6 to 7% return to sustain themselves. They have put all of these pensions across the board in America into situations where they cannot handle their unfunded liability going forward. And if they don't get rates a little bit higher for the pension fund managers, we're going to start seeing pension default like crazy across this country. Okay, so they got that on their hands. But then on the other hand, they say, well, what about printing money? We could just print more money to solve the problem. No, hello, inflation here
depreciates the value.
Is anybody tired of the inflation and it hitting them in the pocketbooks? You know, and so they can't continue to create money or add money to the money supply because they cannot continue to add to the inflationary pressure that we're seeing in our economy. But then at the same time, they can't keep rates this low, or they're underfunding pensions, and they're really in a pickle. They've got, if they start to raise these rates to help the pension managers and everyone else who needs a higher savings rate, well, we know as soon as they started announcing that in January, what happened to the market? Market started going haywire. We were seeing 2 and 3% lost days, right? So the market is not going to act favorably to them raising interest rates. So if they start to hike the rates up, we're going to see a pretty good market correction. So here they are. They find themselves, and you got to remember the Federal Reserve always has a little bit of politics involved, right?
Sure.
And whatever current administration is running things has some say-so with the Federal Reserve. So here we are in the midst of a midterm election year. If they start raising rates, we're going to see a severe market correction. I don't think that's a recipe to get for an election year, right?
Right.
If they continue to print money, they're going to see inflation continue to soar. I don't think that's a good recipe for an election year, right? So it's going to be interesting to see, because
But you already know, I think the point of this, which fascinates me, is you already know there's 3 or 4 scenarios that could happen March 15th.
Right.
And you already have kind of a strategy, right?
oh yes,
For each one of those.
we're always looking ahead.
So that's why you're always so kind of comfortable and confident. You know, you're just like, it's okay. Don't be fearful. I think that's the biggest thing you and I agree on. It's about freedom, not fear.
Right. Well, and a lot of Americans have fear for a reason today, and they have
Yeah.
a fear for a reason because they don't have a plan.
Right.
See, I'm never fearful because I always have a plan. We're always looking ahead, looking down the road at what's coming. Like we said, we analyze those probabilities, we make strategic decisions, and we say, if A happens, we're going this way, and if B happens, we're moving that way, and if C happens, this is what's going to happen. And we're prepared all the time to maneuver in any way that we need to. So, yeah, I don't really ever worry about markets or economies or anything. But it's also because I'm an economist, so I look at things a little different from most people. I say there's always opportunity.
Yeah.
In bad markets, there's opportunities. In good markets, there's opportunities. There's always opportunities. It's all about positioning when it comes to the financial markets. The question for our viewers would be, are you positioned correctly for anything that could occur this week? How do you know you're positioned correctly? Believe me, something will occur this year that will not be good, because as I stated earlier,
Right. It'll affect everyone.
the Federal Reserve is backed in a corner where they're darned if they do and they're darned if they don't, but which effectively means the American people are darned if they do and darned if they don't. So we will see some negative repercussions on our investment portfolios this year. It's just, what negative repercussion is that going to be? And are you strategically positioned to handle it? And that's, you know, what question I would leave our viewers with right now
Yeah.
is, do you feel confident in where you're going? Do you feel your position correctly? What are your strategies for A, B, or C scenarios? Or have you even had these conversations with your advisor?
Right.
And
I think
say,
some
if not,
people,
why not?
exactly,
Right.
that's what I was going to say. You could have the same advisor for
not?
10 years and you never really hear from them. That's troubling.
Yeah. And if you had the same advisor for the last 10 years and you're still doing what you were doing 10 years ago, time is of the essence. This is a more important time than you have ever seen, with so much uncertainty out there and so many different avenues. If you have still doing what you were doing 10 years ago, that is the first indicator or sign to you that you might not be doing what's in your best interest going forward. It's time to change. Change is coming. The times are changing, and you have to change with the times to stay ahead and enjoy life confidently without fear. As Rebecca stated to you guys, you'll never see me fear. I'm happy, I'm confident every day of my life, because I'm always measuring probabilities and planning for the day ahead. Are you planning for the day ahead? If not, pick up the phone right now. It's your last opportunity to get positions before anything occurs. Next 15 callers who call the show right now, guaranteed one-on-one complimentary meeting, no cost, no obligation. Come sit down with one of our all-star advisors today. Let's get you positioned in the driver's seat so you can cruise on through retirement.
And speaking of cars, it might not be a total overhaul. It might just be a little tune-up that you need, and they'll look at your big picture. So, as Paul said, there's the number 228-388-2031. And when we come back, we're going to tell you about some new offices Roberts Wealth Management is opening. Stay with us.
In the year 2020, our world was turned upside down. The COVID scare caused volatile shifts in markets, and in reality, nobody knew what we were going to experience that year. At Roberts Wealth Management, we were no different. And although it was a tough year, what I can say is that we build financial plans to navigate tough times. If you don't have the confidence in your financial plan that you so well deserve, give us a call today and we'll help you retire right. We are frequently asked, what's more important in retirement, having a great plan or working with a great advisor? The answer is that both are vitally important to your retirement success. Retirement planning is not just a one and done, which means that even the best plans will need to be adjusted. That's exactly why you need an experienced partner to guide you on the journey. Are you confident enough in both to seek a second opinion? Contact us today for your own complimentary analysis.
Thanks for staying with us. I've had the pleasure of meeting every single one of Roberts Wealth Management All-Star team, and they truly are remarkable people. And such success that you are opening, you've already opened in Mobile at an old IRS building, which I love, and you're getting ready to open in Hattiesburg.
Yeah.
So I want everyone to know in the Hub City, you don't even have to drive down to Biloxi anymore.
That's right.
Pretty soon.
That's right. And, and we've got our radio shows airing in the Mobile to Pensacola area and the Hattiesburg area. Which we're getting a lot of following and a lot of great response from, and a lot of people. Actually, we're hearing from a lot of people in Hattiesburg that they had heard our radio shows from the coast, like when they were driving, and they would get within distance to pick it up,
and then lose it.
And they lose it, and so they said, now we've been listening every weekend, and it's great stuff. For our viewing audience out there, we have Retire Right Radio every weekend, and on the Gulf Coast, it's 104.9 News Talk FM, but pick it up, listen to it, man. It's a lot of great information there. We
awesome.
We do a lot.
Well, you told me outside when we were on break about, because I ask free advice all the time, by the way, and he's always right, which drives me crazy, but it's great. You said keep more cash on hand. I actually texted my husband, okay, how much do we have in our account? Why do you and your wife, and why do you say keep more cash on hand? Don't invest it with me necessarily. Keep more cash on hand. Why?
Well, there's one, in the keep more cash on hand, there's kind of two different worlds that I'm talking about there for our viewers. Number one, right now, as we were talking about our market outlook this year, anytime you get into uncertain and volatile markets, right, it's a good idea to pull back your risk a little. And so you should pull a little bit of that money out and hold it in a cash position. But not only that, it's good to hold a cash position for opportunity money, right? Because during volatile markets in a shaky year like we're going to have this year, you don't know what opportunities are going to arrive. But there will be some opportunities arrive this year, right?
Gotcha.
The whole
because people will lose money, prices will drop, and it'll be your opportunity to. Gotcha.
Because they say it's very simple: buy low and sell high, right?
Gotcha. Yeah.
The phenomenon we laugh at in the industry is that everybody seems to buy high and sell low, right? They buy it at the wrong time.
It's popular now. Whoops.
It's popular. Everybody's doing it. We buy it, and when do we sell it? Oh God, I can't handle it. I've lost too much money. So we're trying to encourage people, instead of buying high and selling low, let's hold a little cash on the side, because they're going to have some opportunities to buy some asset classes before this year is over at a good discount.
But excuse me, a lot of the money that someone has invested, they can't take it out to be cash strong because they'll be overtaxed.
It depends on the situation, okay? So this is after-tax money we're talking about, obviously.
Gotcha.
Or if you're inside of your IRA, it's tax deferred, so there's no taxable event occurs in there. You could sell some of the stocks in your IRA and just hold a little more cash position, so when stocks dip, you could buy a little bit more on the discount, right?
Gotcha.
So just holding cash right now for the purpose of purchasing assets when they become discounted this year is a good idea. But then also, like we were talking during the break, and I don't know, this may be a little
controversial,
or edgy to say publicly on television, but I don't really hold back that much. I have some concerns, and I've started speaking out to my client base and telling them I would like to see all of them hold at least 2 months worth of expenses in cash at home currently, or it doesn't have to be at home, but somewhere accessible besides the bank.
Right.
And they're saying, why? I said, because there is a chance that maybe sometime in this year or next year that you can't get some money out of the bank. And people ask me, well, why would that be? You see, the beauty of the way we work is, since I'm not a financial advisor and I'm a research nut, I've taken myself out of the role as an advisor in the office. All of the other advisors do that every day so that I can be free to do all the research and education and due diligence necessary.
Yes.
And so I constantly keep up with everything. And I watch the IMF and the World Bank and the national banks and the central banks and the World Economic Forum. And I keep a close eye on all of them, because if you really want to know what's going to happen in the world at any time, or you want to be able to forecast and project forward, those are the players. They run the game. So if you want to win at the game, you watch the guys who run the game, right?
Most of us don't even know who those guys are. Really, I mean, honestly, it's on purpose.
Yes, and that's the sad part today. Is not a lot of people. You know, these are the people we call work in the shadows, right? Not up front. But the World Economic Forum and the World Banks have been currently running simulations on what would happen if we had a financial infrastructure cyber attack. Now, I'm not here to say, and either way, hopefully it never happens for anybody.
Absolutely.
But if you plan for the worst, then you're okay if it doesn't occur, right? All I'm going to say publicly is that every time in the last 6 years that the International Monetary Foundation, the IMF, the World Bank, and the World Economic Forum get together and they simulate things that they think are going to occur,
they magically happen.
they somehow seem to happen a year or two later, okay? Now, whether that's their crystal ball, I don't know, I'm not getting into, it doesn't matter. You watch the players if you want to know the game, and right now the players they're simulating what if a major cyber attack hit the entire financial infrastructure, shut down all the banks, shut down all the stock exchanges, and what would happen and how would that go forward. I'm just going to tell you, if it happens, the banks are going to be shut, you're not going to get money out. And if you were sitting at cash at home, then you will not be one of these people freaking out and wondering, when is this going to be over and when are the banks going to reopen and when can I move forward? Like I said, hopefully it never occurs.
Right.
But the probability of it occurring sometime within the next 24 months is pretty high. So my question to our viewing audience is, are you looking forward? Are you thinking outside of the box? Are you talking about all the probabilities and risks that could be associated with your future, with your advisor? Are you having these conversations, or are you simply talking about the hot stock tip or the hot mutual fund of the week? That's not all that goes into financial planning. We're going to wrap up the show today, but this is your opportunity. Give us a call. Come sit down with one of our advisors. Let's see if we're a good fit to work together. If so, we can put you in the driver's seat. You can handle retirement. We'll get you set on track to retire right.
Thank you so much, Paul. And there's the number, 388-2031. Thanks for joining us.